Welcome back. Let's focus on the paint space. And Indigo Paints, well, they reported a pretty much subdued set of numbers on the growth factor for the fourth quarter. The company has witnessed sluggish growth across its segments. To help us out with how things are panning out, Mr. Hemant Jalan, the chairman and MD at Indigo Paints, joins us on the show. Hi, sir. Good morning. Always good to hear your thoughts. Well, the quarter was a little bit subdued, but the stock price is up close to around 2%, telling you the markets are looking ahead. So give us a couple of guidelines. What kind of revenue volume growth are you looking at for FY26? And if you could help us out with what's the guidance on the margins as well from here on?
The reason why I think the stock market could be possibly rallying despite subdued performance is because you will notice that for all the paint companies, Q4 has been significantly better than Q3. Now, I'm not saying that Q4 are a great set of numbers, but at least the improvement in the demand situation is in sight. And as we speak, when we are more than halfway into Q1 of this year, we see a further improvement in the demand situation and the sentiment happening. So I think we are only a few months away from hitting back to the normal demand scenario when the industry would grow by 7-8% and we would grow by more than 20%. So I'm hopeful that that situation would come about from at least Q2 of this year. But I think you'll see improved numbers on the top line from all the paint companies in Q1 is what my expectation would be.
So, and for you, sir, what kind of a revenue growth can be penciling in for the year, given that demand's going to come back? And also, tell us on the profitability. And when we're talking about your margins, ad spends as a percentage of the mix, that obviously comes up because it's around 6%. Where does that number stabilize at? Revenue, margins, ad spends as a percent. 3 points. Please go ahead.
I would be wary of giving a guideline number as far as top line or bottom line growth numbers are concerned, because we are in the midst or just getting out of the longest spell of weak consumer sentiment that anyone has seen in the last 25 years. So although the signs are good, we can see some improvement. Exactly how long it will take for this improvement in the demand scenario to come about is a little difficult to forecast. And therefore, I think we'll have to wait and watch until the demand does come back to its, shall I say, normal levels that used to exist before the last 15 months. Once that comes, we would be happy to give a number guidance. But as far as profitability is concerned, if you notice the whole of last year, I mean, we have only done less than 2% of top line growth, but the bottom lines have pretty much held up. And in Q4, we have done our all-time highest EBITDA number of 23.4% and our all-time highest PAT margins of 15.1%. So I think there is some softening in the raw material prices, which has been continuously happening over the last 5 or 6 months. It looks like that will continue going forward. And that, aided with a little bump up in the demand, I think should see the margins holding fairly steady, if not going up as we move forward.
So, Mr. Jalan, sir, hi, good morning.
Hi.
Two-part question. When you say demand normalizing, because it's been quite a while, several quarters. So when you say normalizing, would you consider 10% growth in a year as normal or single digit as normal? And how far away do you think we are right now from that normal?
So as far as the industry is concerned, and I'm not talking about Indigo Paints, the norm for the industry has been anywhere from a 7 to 9%, top line CAGR, and that has pretty much existed over the last 10, 15 years. So that is what I would call a normal demand scenario, where the industry starts growing at anywhere around, let us say, 8%. Obviously, you have been seeing for 5 quarters in a row, the industry leader has been at negative of 5 to 6%, sometimes a little more than that.
Yeah.
So that is very obvious that.
So do you see, sir, the industry, like you're not giving numbers for Indigo per se, but do you see the industry, paint industry, come back to that growth of at least 8 to 9% this year?
Oh, certainly. I'm hopeful that it will come by the end of the second quarter. We can see the gradual recovery happening. It's not a hockey stick recovery. It's a gradual recovery, but it is consistent. month after month. So I think it will inch back to its numbers by August, September.
Okay.
I'm hopeful that it will happen earlier, but I can't bet on it.
Okay. Last question, sir, before we let you go. Your market share is at around 3%, but you are adding capacity as well big time, the Jodhpur facility. Could you tell us where do you see your market share headed from around this 3% in the next, say, in the next 3 years or so?
The next 3 years, if we can take it to 5%, we'd be very happy.
That would be the aspiration?
Yeah, that would definitely be the aspiration. And all capacity increases are done with a long-term view in mind.
Okay.
And we expect that we would start utilizing those capacities meaningfully in the next 1 or 2 years.
And this expanded capacity, the two upcoming plants will enhance your capacity by 80%. What would that mean in terms of revenue potential?
I don't think in the paint industry you can equate capacity to demand or top line.
Okay.
I think that the two are totally independent of each other. Capacity expansion is done with a long-term view when you feel that 3 years down the road, you may hit a bottleneck. But increase in capacity by itself is never a precursor for increase in top line. It's the other way around.
Got it. Okay, all right, sir. Thanks a lot for joining in and filling us in with all of those details. Looking forward to chatting up with you as the course of the year progresses. For the